Here's a bold statement. The stock market's current highs aren't just luck. They're driven by a handful of mega-cap companies reshaping the global economy. But here's where it gets controversial. While headlines focus on tariffs and inflation, the real story is the explosive growth of artificial intelligence, AI, and the resilience of U.S. consumer spending. Let's dive into why this matters and how it's shaping Barry Schwartz's top picks for September 2nd, 2025. Barry Schwartz, President-CIO of Baskin Wealth Management, is zeroing in on North American large caps, with a spotlight on Taiwan Semiconductor Manufacturing Company, TSM, TFI International, TFII, and Costco. His rationale? These companies aren't just surviving, they're thriving in a rapidly evolving landscape. Market outlook, the unseen drivers of growth. Ever wondered how the S&P 500 keeps climbing? It's not magic, it's megatap giants like Nvidia, Broadcom, Amazon, Microsoft, and others leading the charge. These companies are riding the AI wave, dominating storage solutions and catering to a robust U.S. consumer base. And this is the part most people miss. Tariffs, often feared as market disruptors, are being offset by unprecedented spending on AI, a trend few saw coming. Here's the breakdown. 1. Earnings growth. S&P 500 earnings are projected to grow 11.5% in 2025, up from 9.7% in 2024. With 13.8% expected in 2026. Faster growth, higher multiples. It's that simple. 2. Interest rates. U.S. rates have peaked and cuts are on the horizon for 2025 and 2026, easing borrowing costs for businesses and consumers alike. 3. Inflation, stabilized and under control with no significant threats looming. 4. Tariffs, largely a non-issue thanks to AI-driven spending that's dwarfing any negative impacts. As a Canadian wealth manager, Schwartz remains bullish on U.S. companies. Why? Because the U.S. has birthed global tech platforms that generate recurring revenues and massive free cash flows. A far cry from the cyclical and commodity-driven businesses of the past. Bold question. Are U.S. valuations justified? Schwartz says yes, and here's why. Top picks. The companies leading the charge. 1. Taiwan Semiconductor Manufacturing Company, TSM. Schwartz calls it the most important company in the world. Why? TSM is the sole manufacturer of cutting-edge chips powering AI, smartphones, 5G, and autonomous vehicles, with sales projected to grow over 20% through 2030. Its management has masterfully balanced capacity expansion with high returns on invested capital. Controversial take. Without TSM, the AI revolution stalls. Agree or disagree? 2. TFI International. Tariff fears have hammered TFI's stock this year, but Schwartz sees a turnaround. With tariff clarity emerging, the trucking business is stabilizing, and TFI's aggressive cost-cutting and share buybacks position it for growth. Thought-provoking question. Can TFI deliver $8 per share in a normal operating environment? The numbers suggest yes. Number 3. Costco. Costco isn't just a retailer, it's a global phenomenon. With plans to open 25 to 30 stores annually for the next 2 decades, its low prices, quality products, and stellar customer service are universal appeals. Controversial interpretation. Is Costco's valuation expensive? Yes, but its brand durability justifies the premium. What's your take? Past performance, a track record of success. Schwartz's past picks speak for themselves. CCL Industries, 13% total return since July 2024. Domino's Pizza, 15% total return. Amazon.com, AMZN, 22% total return. Average total return is closures. For full transparency, here's how these picks align with personal and family portfolios. TSM, yes. TFII, yes. Cost, yes. The market's highs aren't just a fluke. They're a testament to innovation and resilience. But what do you think? Are U.S. valuations justified? Can TSM maintain its dominance? Share your thoughts below. Let's spark a conversation.